Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of the 2-minute drill. Today is Wednesday, August 16th. I cannot believe we're already halfway through the month of August. That means next week is going to be Pro Farmer Crop Tour. Myself, my partner Rob will be down there. We're going to be on the eastern leg, and we're going to be sending out a lot of video updates throughout the week on our YouTube channel. We're aiming to do 3 or 4 videos a day with reports of our findings. So if you do not subscribe to our YouTube channel, head over to youtube.com, type in Blue Line Futures, and hit that subscribe button. As always, we appreciate the support. You'll get a lot of great content in return, not just next week, but going forward as well. Now, before we get into the charts and the 2 markets that we're looking at, I do want to go over some of these closing prices. Corn futures, they ticked a tick below yesterday's low, but we're able to reverse and finish the day 6 cents higher to settle at 481.5. Soybeans, they were the big winner on the day, which shouldn't be much of a surprise with the hot and dry forecast through the balance of August. November futures finished the day 18.25 cents higher to settle at 1323.5, just knocking on the door of a potential breakout there. Wheat futures, well, they were a dud, which kind of par for the course at this point. December down 3/4 cent to settle at 623. On the livestock side of things, there was a lot of pressure yet again at the close. October live cattle 70 cents lower to settle at 179.27. We'll get into that chart here in a little bit. September feeders 77 cents lower on the day to settle at 249 even. Last but certainly not least, October lean hogs, they finished the day 2 cents lower to 78.17. So now that we got that out of the way, we can get into the charts and go ahead and get that shot clock started. Here we got the December corn contract pulled up here. We've been talking about potential for a relief rally, but we talked about this morning getting out above 480 to 482. That's going to be a big level to keep a close eye on. As you can see here, this was previous support. It was the breakdown point yesterday. It's now going to act as resistance. The bulls must get out above 480 to 482 to have some hope of getting a bigger relief rally going forward. I think that we potentially can get that, but again, the bottom is a process, not necessarily a point. Need to see consecutive closes out above 480 to 482. If we can achieve that, potentially you start to see a little bit of short covering, take this market a little bit closer towards that psychologically and technically significant $5 level. Looking at the seasonality of things, this black line is where we are right now. The red line represents the 5-year seasonal average price. So seasonally, we can kind of carve out a low here. I wouldn't be surprised to see us attempt to do that again here in the face of all this bearish news. But again, technical is going to be a big key. Next week's crop tour is going to be extremely important for price action, as well as it probably gives us a better indication of what's actually out there versus what we're seeing in the weekly crop progress reports. Now, before we wrap this up, we still got some time, so I do want to cover live cattle. This is the October live cattle contract, and we've been talking about this in our reports as well. Break below trendline support, which is what happened yesterday, opens the door for a retest of this 179 level. And this is the real significant pocket, represents the 50-day moving average, something that we haven't tested since breaking out above it back in May. Break and close below there, and I think that could spur some additional long liquidation. We've been talking about a big fund position in that market for quite some time now. Seasonally speaking, well, seasonally, this is a bearish time of year. It doesn't have to be that way this year, but if the technicals start to break down, the funds are aware of these seasonals, and you could, again, start to see that long liquidation come into play and press this market a little bit lower. So that should be about 2 minutes on the dot. If you've got any questions, please feel free to reach out. You can email info@bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.